After a somewhat negative week for the equity markets, this stock market's starting to look very confused. But maybe, just maybe, there's a bright spot here. Last week I talked about how the stock market was giving mixed signals and there was some likelihood it would go lower this past week. Well, that's exactly what happened. So let's take a look at what we're seeing now. There's a link to that video in the pinned comments below. But before we get into that, I want to thank you for watching my videos on YouTube. At best, investing can be like trying to find your way through a graveyard blindfolded on a cold, foggy night, while at times it's more like trying to find your way through a minefield blindfolded to get back to success and safety. Look, most of what you'll hear in the mainstream news is vague and not actionable. In other words, it leaves you even more unsure and confused than you were before you watched it. Fear brings viewers, for sure, but that isn't the state you need to be in if you want to be a successful investor. My goal is to bring you solid, repeatable information that removes the blindfold and helps you feel more confident about the current state of the markets and your investments. Even if that view is saying things could likely get worse, then at least you know where you stand and what to expect. Please let me know in the comments below if there's anything I can do to improve this channel in that regard. Now let's jump into the markets and take a look at what's going on. If we look back over the past 5 days, as you can see, the markets did not do well. In fact, the only index that ended the week up was small caps here. You can see everything else closed negative. Not a good week, but not terrible either. What if we look back over the past month? Well, you can see that stocks did rally in general, although ARKK finished lower, so this doesn't look great either. But if we look back year to date, so a little over 3 months, you can see we've had a fairly nice rally here in all the indices, and ARKK's leading the way higher, NASDAQ coming in second, S&P third, and then small caps in the Dow fourth. This actually looks pretty good. And what about over the past 6 months? Well, you can see that we're actually higher in all of these indices over the past 6 months, so that's not terrible. NASDAQ's leading the way, that's not bad. I'd like to see ARKK recover though, and come up here and be on the top of this pile. We're not quite there yet though. And what if we look at the equity bottom dynamics? Well, this tells me an interesting story here. You can see we had some bottom confirmation signals almost, but the confidence level wasn't there. Last week I said that I thought the markets might start to drop because this was rising, but confidence was falling. And in fact, we did get a drop last week, as I demonstrated earlier. But now where are we? Well, now the bottom forming indicator is coming up here, meaning the markets are going down, and the bottom confirmation indicator is dropping, meaning the markets are going down. But what else is happening? The confidence level's dropping. So maybe we go higher this week. Nobody ever really knows, but if I had to guess, that's what I would say. And what if we look at risk opportunity? Well, here's another signal that tells me things could go higher. You can see that the risk acceleration is plummeting here. Now, the risk, the red line, is actually moving higher, so that's a little concerning. But if we look at the opportunity, this blue line, that's also shooting higher. So we've got the opportunity level shooting higher. We have risk acceleration shooting lower. The only conflicting signal here is that the overall risk is moving higher. But this signal typically lags these other two. So we'll have to wait and see what happens this coming week, won't we? And if we take a look at risk versus equity, this gives us a fairly good short-term view of what's happening in the markets. Well, you can see that the NASDAQ 100 was ranked number 1 back here on March 31st. And what's happened since then? Well, you can see that it has moved lower. Not a good thing. And if we look at long-term treasuries, you can see that while they moved higher here from March 31st to April 6th, they have since plummeted down to last place. So we have a very unhealthy treasury market. And what has cash been doing over this time frame? Well, cash moved kind of sideways, then it moved up, and then it moved up again. So this is the wrong direction. We don't want to see cash moving up in these rankings because that says that other things are at risk. and what's at risk. Well, we've got the Dow, SPY, and small caps ranked 1, 2, and 3. So you're saying, oh, wow, equities are doing well. Yeah, but the NASDAQ 100 is not doing well. You want this one to be ranked number 1, not the safe stocks in the Dow. And you want cash to be lower than this. And ideally, I'd like to see a healthy Treasury market. This is looking a little bit tentative here. And what if we look at the buying and selling pressure? Well, for the Dow Jones Industrial Average, you can see the buying pressure has been on a decline here over the past several weeks, while the selling pressure has started to increase recently. This really doesn't look good on one hand. On another hand, you could say, well, these are the safer stocks. So I'd like to see the marketplace selling these stocks and buying riskier stocks. Let's take a look and see if that's happening. And what about for the S&P 500? Well, if we look at the S&P 500, again, the buying pressure has been on a decline, while the selling pressure has been steadily increasing as this flat tops. So this really doesn't look all that great. And what if we look at the NASDAQ 100? Well, for the NASDAQ 100, yes, you can see that the buying pressure dropped here, but now it's pivoted and it's starting to move higher. This actually looks encouraging, and I hope this trend continues because I'd like to see investors starting to put their money in the riskier NASDAQ stocks, in the riskier innovation stocks in ARK, and not so much in the Dow and the S&P 500. So let's see where this goes, but this is a good start. And what about the Russell 2000? Well, you can see we've had a fairly nice rally here, although the buying pressure and the selling pressure have been kind of trading places here. And if I had to tag this, the buying pressure, as you can see, has been on the decline, while the selling pressure has been increasing. And what about ARK Innovation, the riskiest basket of stocks? Well, ideally, I'd like to see these doing better. So what do we have here? Well, if we look at the buying pressure, you can see since back here, it's sort of been on a very tentative incline, almost flat, but slightly tentative and incline. And then if we look at the selling pressure, it's been kind of declining but flat. So not much going on here. I'd like to see this pick up. I'd like to see the buying pressure move above the selling pressure, and I'd like to see ARK moving higher before I'm really willing to say we're in a healthy market. And what about sector rankings? Now, these sector rankings give us a little bit of a longer view, so they tend to lag where the market is actually at any given time. But if you look at this, Bitcoin and gold are still up here, ranked at number 1 and number 2, I think because of the banking contagion we saw a few weeks ago. But you also have technology, and we have consumer discretionary slightly ahead of consumer staples. I like the fact that the NASDAQ and SPY are ahead of the broad index Dow Jones Industrial Average. These are safer stocks. I want to see the riskier stocks doing better. But as we know from the buying and selling pressure, we're not quite there yet. And the other thing I don't like is that cash is ranked up here so close to the top rankings. This is not a good look. But you can also see that the Treasury market is not healthy. The longer duration, riskier Treasuries are ranked down here versus the safer Treasuries, which are ranked up here. What about sector rank acceleration? Because this moves faster. This is a quicker, shorter view, more real-time view of what's going on in the markets. Well, this looks really ugly. Cash is ranked first. You don't see much risk up here. You see short-term Treasuries, intermediate Treasuries ranked here. That's not good. You see consumer staples up here. That's not good. We don't see any risk assets until you get down to technology here. Now the SPY is beating the Dow. That's good. But, the Qs are down here. SOX is down here. ARK is down at the bottom. This looks not great, I gotta tell you. And consumer discretionary is way down here with consumer staples way up here. So this does not look good. And how do the Treasuries look over the past week? Well, you can see we kind of went nowhere. They tried to rally here and then pulled back, so kind of a flat week in terms of Treasury performance. And as I've said, they look like they're in an unhealthy place right now. I've been really kind of disappointed in the inverted yield curve. I was hoping here that we would see some attempt to become not inverted, but as you can see here, this shot up and then it's been just slowly withering away. And now instead of being, 40 basis points inverted. We're now over 60 basis points inverted. This is the wrong direction. We want this to go up above zero, so we're not in an inverted yield curve anymore. And what about treasuries in terms of buying and selling pressure? Well, you can see for intermediate treasuries, the longer-term trend in the buying pressure has been down, but if we look more recently, it's been on an upward incline, while the selling pressure more recently has been on a downward slope. So this looks somewhat positive for intermediate treasuries, although the price action is falling. So not a great picture here. If we go a little bit longer to what I call intermediate to long treasuries, you can see the selling pressure well above the buying pressure, although it's dropping here, and you can see the buying pressure has been falling as the price has been falling. So this doesn't look very healthy at all. And if we look at 20-year bonds, long bonds, the riskiest treasuries, you can see again the selling pressure well above the buying pressure, and the price has been falling. So not a great look for treasuries on any level. Now, people piled into gold back here because of the banking contagion, but you can see that has been leveling off and even falling lately as the selling pressure has started to shoot straight up here. So I don't think gold is in for a good play unless something bad happens in the next several days or weeks. What about Bitcoin? Bitcoin was another place that people threw their money when the banking contagion hit. Why? Because blockchain worked flawlessly while the banks were starting to fail. So I think there was some hope here that blockchain and Bitcoin would be a savior, and so people piled into it. Now, it sort of peaked out here and has been falling. You can see that the buying pressure has been dropping and the selling pressure is increasing. So this doesn't look good short term either. When we look over the longer term time frames like year to date or the past 6 months, the equity markets appear to be in a healthy state. But in the shorter term, they look somewhat unhealthy and a little bit confused about what comes next. While the Treasury markets are presenting a very unhealthy picture right now. Like I said earlier, if I had to guess, it looks to me like the equity markets are poised to move higher in the next few days, but it's anyone's guess how they will look beyond that very short time frame, or even if they'll move higher in the next few days. The Fed is poised to raise interest rates by another 0.25% or 25 basis points when they meet in just over a week from now on May 3rd. And the markets give that rate increase an 89.1% likelihood of happening. Let's hope the Fed finally comes to their senses and either doesn't increase rates at their next meeting or indicates a willingness to lower them in upcoming meetings. I'm Calvin Rose, and thank you for watching Invest Smarter this week. That's all for now.
Pour it out, if I'm being honest.